And a big week it has been for the financial front. Two events took place. Stats SA released figures putting unemployment in the country at 27.1%. And SARS, that's of course the South African Reserve Bank Monetary Policy Committee, announced that interest rates would remain unchanged. That's at 7%. Amidst this, the country's fears of having our credit rating downgraded have intensified as we await Moody's rating review. It's happening today, and S&P will happen next Friday, while Moody's downgrade of South Africa's sovereign rating from its current rating of 2 levels above sub-investment grade will be disappointing. A more significant indication will be whether it changes its current outlook from negative to stable. For some analysis, we're joined in studio by Sthembile Mbete, who is an analyst and lecturer at the University of Pretoria. Good to have you. Welcome to the program.
Thank you. It's good to be here.
Thank you. Now, we had a look at some of the issues that came out this week. Yeah. I mean, unemployment figures, not good news for South Africa as well. However, interest rates on hold. How does that bode for what we're expecting today?
Well, you know, what the ratings agencies do is that what they are saying is they are putting forward a rating of the likelihood of South Africa being able to pay back its debt from the international markets.
And we're sitting at about, what is it, 165 billion rand?
Yes, that we're going to need to make up, that's our deficit, that we're going to need to borrow to meet all the needs that we have as a country. And so what the ratings agencies do is that they look at various indicators. They primarily focus on the economic ones. On GDP growth, we know that a growing economy means that there's more tax revenue that then allows you to be able to pay back debt. So they look at GDP growth, they look at inflation, they look at employment figures to really build up a picture of the economic health of a country.
Yeah.
And so the numbers that came out this week, the unemployment numbers, we've seen that unemployment is at its highest level since 2003, which is a great concern about the ability of the economy to absorb all of the potential labor that is in that economy, firstly. And secondly, what we've seen is that it's a real indicator of the economy's low growth. We know that the growth prospects for 2016 have been revised down to 0.5%, which isn't very high at all. And so that really does raise a concern about the overall health of the economy.
So what are your predictions? What do you foresee coming from Moody's, particularly today? Because, you know, we've been working literally. I mean, you look at our finance minister who's sitting on screen right now. He's one guy that came into this job sprinting in terms of trying to keep these rating agencies from not dropping us into this sub-investment grade. It's a place where nobody wants to be. What are your predictions for today?
I think that what we've seen is the finance minister has really tried to work on what he can control, which is what we call fiscal consolidation, which is really reduce government spending and try to increase tax revenue to the government's revenue so that we will be able to meet our needs, to meet our repayments. What we've also seen is that one of the big concerns for the ratings agencies in previous reviews has been around the relationship, the prospect for economic policy stability, so whether or not the various fights within the governing party are really going to lead to wanting to spend more money in order to attract more votes or to satisfy certain constituencies. We've also seen concerns raised about the lack of cooperation really between business, between labour, between government, and this lack of all of those three sectors seeming to be pulling in one direction. I think that the announcement that was made this week around the minimum wage, which came from a consultative process in NEDLAC, a real consultation and cooperation between business, labour and government, bodes well for that aspect of economic policy and concern that the ratings agencies may have. However, I think that the weak economic growth and the we saw the inflation numbers come out this week as well, that producer price inflation is a bit higher than was expected. And then
also, I mean, we can't ignore infighting within the political party and government, because that has a very big that has a big effect on ratings agencies and the views of how they determine, where they're going to notch us.
Exactly. And what it affects really is the prospect of stability in the country, which is what the markets, markets like stability. And so what it really affects is the way in which they think the leadership is going to stay stable. I mean, we've seen all of these instances this year, especially last month, where there was a prospect of arresting the finance minister. And so really, the concern around the political fighting is how it affects stability. Okay. So I think that we may survive today from Moodys and have it kept stable. But I think that the prospect of a downgrade remains high,
still
and
hanging
it's still
over
hanging over our heads. Yeah, and I think it will still be there for quite a while to come.
Let's leave it there. Thanks so much for coming in and giving us a little bit of a background information as to what we can expect from today. It is a big day, so something we need to be very, very vigilant of. Sthembile Mbete, Political Sciences at the University of Pretoria. Thank you very, very much for joining us here on the program. And that's today, Moody's review released today, and another two agencies, Fitch and S&P, they'll do that next week, and that'll be on the 2nd of December. All right, let us now get you